Looks like on the weekend Europe couldn't agree on anything again, and right now it's Standard and Poor's is threatening to it might downgrade a lot of the AAA rated countries, including Germany and France. So that could be an exodus to the U.S. dollar, and according to the financial experts, bearish for the metals. But my common sense says something else. If I was in the European Union, why the hell would I want to buy the U.S. dollar versus metals? I'd be buying the metals. So I'm not quite sure if it's going to pan out that way because, it looks like what's going to happen in the near-term future, it looks like the AA rated bonds are going to be the equivalent of the AAA rated bonds in the past because there's so much of a debt crisis going on within all the governments. So I think this is actually going to be bullish for the metals because sometimes I don't trust anything that's going on in the markets as far as the spot price, and I think there's a lot of physical buying going on, and you really don't have good numbers to go by. Um, but I'm going to look at something else. I was looking at some of these ratios in the metals and something with the industrial metals too. But it looks like it says the S&P will publish a decision as soon as possible after the EU talks. Moody says there are a chance of more severe scenarios, including multiple defaults and exit from the euro area. I don't think the euro is going to go down, but I think there's going to be so many fears that it's going to affect the markets. I don't think it's going to go down right away. It could. I think it's going to go down longer term. Maybe it will be in a year or something, but I don't think it's going to go down in the next few months. But what they're going to wind up having to do, it's quite obvious. They're going to have to do some kind of quantitative easing, and that's going to be extremely bullish for the commodities. I was looking at a lot of these ratios, and as far as the platinum to the gold and the palladium to the gold and the platinum to the palladium. Now, what's interesting is, fundamentally speaking, if Russia didn't have all those stockpiles for all those years from the decades before the 1980s, for many years, I guess they were mining this stuff for like 50 years prior to that, stockpiling palladium. There wouldn't have been such a glut on the market of this stuff for so long that they could dump them on the market and drive the prices down, up and down as they desire, because palladium is actually more rare than platinum. And you look at some points in time, platinum was almost 6 times what palladium was, and this is back in 2000 into 2009 and also in 2008. At other times, they were about equal. So right now, platinum and palladium are screaming buys, both of them, both of them. Looking at this ratio, this is the dark blue line. It's platinum to gold. Usually it runs about 1.5 to 1 or 1.4 to 1 historically, but just looking back the last 10 years, usually it's about 2 to 1. I'm not talking. I don't like taking these 30-year averages because sometimes going back that far, I mean, you're talking about a landscape that could be a lot different from what the things are going on today. So I went back only 10 years. It's really been about 2 to 1 all the way back to 2000, and it was only in when we had the crash in 2008 that it dropped down to not much more than 1 to 1 to gold. Now, today it's actually a lower ratio than it's ever been since more than 10 years at least. And if you go all the way back when gold was $300 an ounce, and you're going all the way back into the 60s when gold had to be $35 an ounce, platinum was always a lot more money because you just couldn't buy it. You couldn't buy gold. But more realistically is to look at what goes on in the last 10 years, because you're getting a more recent history. In the last 10 years, really, platinum should be double what gold is. So I'm thinking is if there's gonna be an economic recovery at some point in time, and that would be the metal to hold, because you might be thinking they're going to come out and say, okay, gold is no longer you're going to have a currency backed by gold, and maybe you'll see the gold prices drop, but you still might see the platinum prices still going up or hold their value a lot more. because this ratio I think is going to come back. I think it's going to come back at least 1.5 to 1 or 2 to 1, and you're going to see palladium probably worth more than platinum, just looking at some of these historical levels. So, I mean, there's been some big differences back over the years, and it doesn't seem like it's possible. But if you look at the palladium to gold ratio, if you go back to the highest point it ever was, it was 4 to 1, and that was back on January 27, 2001. Palladium was going for 1,075 an ounce. I think it actually hit 1,085. This is like an average bid price, and gold was 262. So it was 4 to 1, 4 to 1 ratio. That's a hell of a big difference, and you might see that kind of ratio again long term. And I mean, everybody's concentrating on silver a little too much, I think. But I know that palladium's got some disadvantages, but one time there comes a little bit of a shortage on it. That's what you're waiting for in silver too, a shortage. And I think something like palladium that is far more rare than gold and it's even more rare than platinum. There's going to be a short squeeze coming on that with that metal some point in time. As far as platinum to gold, platinum even in the last 10 years has traded 2.4 times the price of gold. Looking back at the beginning of 2001, platinum was trading for over $1,000 an ounce, and gold was at 263. So at $1,036, $1,035 an ounce for platinum, and gold was 263. So I mean, there's no reason that platinum should be at least $2,000 an ounce. It's absolutely insane that platinum is that much less than gold right now. So that it just cannot continue, and it makes me think, because this ratio is even more skewed than it was back in 2008. That because back here in 2008 the ratio is a little bit higher as far as the palladium to gold and the platinum to gold. It was a little bit higher. You can see here, this blue line represents platinum to gold. It was still trading, maybe dipped, it was right around the same price as gold. It wasn't significantly lower, and right now it's lower than it was. So that's an indicator that the economy is probably worse off right now than it was in 2008, just by what these metal prices are showing. But you could see a serious rebound, and these are all just ratios now. So I'm talking about, gold was increasing at this time, but platinum and palladium was actually increasing much faster. So I think there's going to be a return to that pretty soon. And the only way they're going to get out of this mess and this financial crisis, at least in the short term, they're going to do a hell of a lot more quantitative easing. I don't think they're going to let that euro fall apart so easy. They're gonna do all kinds of things to increase the money supply, whether it's coming from our own Federal Reserve or if it's coming from the European Central Bank. So I don't know. People looking too much at silver. I would not be ignoring these metals. I'm holding them. I did buy a little more PSLV today because silver would drop down about $31 an ounce. I think it got down a little bit below 31. I got it around 31 spot price. I also picked up 10 rolls of nickels at the bank, and for $20. And I walked in there, and the cashier didn't have enough. They had to borrow some from other people, So that's about all you can get at a time, about $20 worth of nickels. But I figure you do that every week, whatever. I mean, it's a small bet, but as long as it's a winner, who cares? That's the way I look at it. So, every little bit, every time you bet, if you win, that's a good thing. That's the way I look at it. But this euro crisis thing, that's what's driving everything down right now, quite obviously. And it's anybody's guess as to exactly what's going to come out. But just my instincts will tell me that they're going to do everything possible to keep the euro afloat. And if it means all kinds of quantitative easing, or if we're doing quantitative easing in the United States and bailing out European banks, that's what's going to happen. And that's all bullish for the metals. So looking at some of these ratios, and I was curious because I had to dig this data out of some places that was kind of a pain to get to, because I wanted to see exactly what these ratios were. But looking at what they are now, I mean, the ratios, platinum to gold is like the lowest it's ever been. Palladium to gold isn't as low as it was, but it's pretty low right now too. So I think those are some screaming buys because gold is still going to keep going up. It's going to be creeping up, creeping up, creeping up as they print more money. And all you need is the economic sector to start taking off again, and you're going to see these ratios return more to like the 1.5 to 1, 2 to 1 on the platinum. So if gold goes to $5,000 an ounce, maybe your platinum's going to be worth $10,000 an ounce, and the palladium will be about the same price. So that's a hell of a lot of money, I think. So be kind of a pain in the neck. You're going to have to pay keep your track of your basis because at $10,000 an ounce, you know what's going to happen. You're going to have to pay tax on that for sure. Not that you shouldn't, that you wouldn't be paying tax anyway. But at $10,000 an ounce, you're going to have to keep track of what your basis is in the metal, and so you know what your profits are. But it's a screaming buy. It's never been, the ratio has never even been this low, even in 2008, 2009 when the financial crisis was hitting, which tells me underlying just from these metals that there is probably a bigger financial crisis going on. And what's really telling you that is the fact that the platinum is so low and the palladium is so low right now. So do watch for that to turn around. Screaming deals.